Everyone, I am Punya Aggarwal, ACCA affiliate and one of the admins of Being ACCA. And in this video, I will be solving the question 2 of your AA pre-June 2022 or 2024 mock, which is Samsingsong company. So let's begin. Let's start with reading the question very well. So it is 1st of July. Just a minute. It is 1st July. So in every question that you read in audit, the dates are very, very important because sometimes they're also talking about, events of the adjustment or when the financial statements were signed or when the auditor's report was created. So it's important that you underline or highlight the dates so that you remember them. So it is 1st July 2005. You are the audit manager at Seven Kings and Company, responsible for the audit of Samsingsong Company for the year ended 30th April 2005. Okay, so already the financial statements, the year has ended, and today is 1st of July. Samsung is a manufacturing company that produces electronic gadgets. The audit is almost complete, and the financial statements are due to be signed shortly. Okay, on 1st of May, which is after the financial statements were made, after the year end. Again, dates are important, mind you. Samsingsong received notice of a lawsuit from a competitor alleging patent infringement. The potential financial impact is uncertain, but it is likely to be material. So it is likely to be material. Okay. The management, after consulting with their legal counsel, has decided to disclose the lawsuit, in the notes to financial statements. So they decided to have a disclosure in the financial statement and not an adjustment, as the possible outcome is possible and not probable. I'll also discuss this thing with you, the difference between possible and probable in just a bit, that they might lose in the lawsuit. This has been confirmed by the audit team through direct confirmation. So they also have like a third party confirmation. So this is like a good news. Okay. Then after 14 days, which is 15th of May, Samsung's management discovered a material fraud. So again, another thing. So this is one thing. This is another thing. The CFO has been inflating revenue by recording fictitious sales. The fraud has been ongoing from past 6 months and has resulted in significant manipulations in the financial statement. So there is a scenario wherein the revenue is overstated by a huge amount, and of course they do not have that funds, right? This has also led to incorrect decisions being made on the inflated financial statements, such as taking additional debt. So they have taken additional debt that the company is now struggling to service. Legal proceedings have commenced against the employee responsible, and their final wages have been withheld. Samsung faces in financial strain due to declining sale and increased competition for obvious reasons, because of course we do not have any legitimate sales. We are having fictitious sales which the person is doing, the CFO is actually doing. Their liquidity position is worsening and they have defaulted in last 3 payments. The board of directors is concerned about the company's continue to go as a going concern. Okay. So we have read the question. We have highlighted all of the important dates, all of the important wordings, which we should remember. Right now, let's move on to our question. Question number 1. Yeah. Which type of subsequent event should the material fraud discovery be classified? Okay. So the material fraud discovery is here at 15th of May. Now, is it an adjusting event or a non-adjusting event? As I discussed about this thing in the previous video as well, wherein we solved question number 1, that always go by elimination method and you will be good to go. So whenever they're talking about any subsequent event, either it can be adjusting or non-adjusting according to IAS 10. I hope you know about IAS 10. If not, please revise the standard, as this is very, very important. So this cannot be the option and this cannot be the option. Either it will be adjusting event or a non-adjusting event, right? So let me quickly explain you the categorization, or basically about IAS 10. How do we deal with adjusting event and a non-adjusting event? So basically, if for example there was an event 1 and your year end was 31st of December, okay, and this event occurred on 10th of January, okay. So in this case, And you as the management, you as the auditor knew that this thing, for example, fire broke at, this event was a fire, okay? And this broke on 10th of January. So at 31st of December, you did not know that the fire will be happening on 10th of January for obvious reasons. आपको नहीं पता होगा कि आग लगने वाली है 10 जनवरी को. ठीक है, तो इस केस में द फायर इज अ नॉन एडजस्टिंग इवेंट इन द फाइनेंशियल स्टेटमेंट्स, बिकॉज इसका जो एग्जिस्टेंस थी वो हमको एट द एंड ऑफ द फाइनेंशियल ईयर नहीं पता था कि ये होने वाला है, राइट? सो योर फायर is actually a non-adjusting event. Now let me also explain you what is an adjusting event and what is a non-adjusting event. Adjusting event simply means that financial statements need to be updated. For example, if the fire, your inventory got all caught up, okay? And now your inventory is of, for obvious reasons, overstated, because for example, if in your financial accounts rupees 1000 inventory was recorded in at the financial year end, but now because of the fire rupees 500 inventory has been destroyed and only 500 is left, so at in your books it is only 1000 rupees at the moment, right? So it means it is overstated. But now because it is a non-adjusting event, we will not be adjusting like this in the financial statements, that we will be bringing down the inventory amount, but we will be having a disclosure in the financial statements that this is the inventory. For example, just let me write it for this case specifically, right? For example, in the financial statements, the amount will be 1000, and below in the notes to accounts, you will be giving a disclosure that on 10th of January, a fire broke out at this area and rupees 500 inventory was destroyed. So now we are left with 500 rupees of inventory. So this is like only a disclosure because the fire broke out after the year end, okay? Now let's take another example of adjusting event. Adjusting event is, as I told you, that if 1000 rupees was the amount stated, we will actually break down that amount and we will come down to 500 in the financial statement. We will be changing this amount in the financial statements, okay? So let's take example number 2. There was a customer, a receivable of yours, who had to pay rupees 1000 to you, okay? Who had to pay rupees 1000 to you, and on 31st of January, on December, you knew that the person was going bankrupt, and but you still was thinking that okay, he's a friend of mine, he will eventually pay this amount, okay? So you recorded this amount in the financial statements and closed down your books. Now on 10th of January, that person is coming to you and saying, oh my god, I'm so sorry, I won't be able to pay because I am bankrupt, I cannot pay the amount. So now this 1000 rupees is actually a bad debt to you, right? And the situation, this same situation existed before the year end also, because you knew that the person is going bankrupt. So in this case, you will be having an adjusting event. You will have to bring down the 1000 rupees receivable and minus it from your financial statements. So this is the difference between adjusting event and a non-adjusting event, and also the meaning of adjusting and non-adjusting. I hope that you're clear with this. So in this scenario, if we see, just a minute. In this scenario, if we see, on 15th of May, there has been inflating. So he would have been inflating the figures from last 6 months. So the situation existed way before the financial statements were closed, because it was 30th of April, and 6 months will be very, before that only. So that is the reason this is an adjusting event, because the situation existed even before the year end, right? So this is why this was an adjusting event. I hope that you're clear with this. Now let's move forward with the next question. Okay. Now let's read the question first. Which of the following statements is not, okay, not. Please emphasize on this word not, correct, but about the auditor's report in the Samsingsong's financial statement, okay. The auditor's report must include an opinion whether the financial statements present fairly in all material respects, and the financial position and the performance of the entity. So this is not correct. This is actually correct, because the auditor's opinion, the auditor's report should include opinion if it is presented fairly, if it is true or and fair. and on your financial positions and the performance of the entity. This is actually true. So this is not पे बहुत ध्यान रखना है आपको, because students actually do not see this not and just tick, go on to write the answer, which is wrong. Okay. So first one is not our answer. It is a correct statement. The auditor's report includes a paragraph that outlines auditor's responsibility regarding other information that the auditor contains, the information in the report that contains the audited financial statements. This is again a correct statement, because the report contains a paragraph that outlines auditor's responsibilities as well. So the report contains management responsibilities and the responsibilities of the auditor both, right? So this is again a very correct statement. Right. Let's move forward to the next statement. So now, till now, we were not able to get our answer because this is not an answer. This is also not our answer. Let's see the next statement. The auditor's report must include, okay, emphasize on the word must, include an emphasis of matter paragraph that highlights a matter that has been correctly disclosed in the financial statements. Okay. Key audit matters are included in the auditor's report of list of report. Key audit matters are included in the auditor's list of companies. This is correct. If you know the sequence of key audit matters, you would know that CAM paragraph, when does CAM paragraph occur and why does it occur, and this occurs in the listed companies. So now if you see this statement, the third statement that we have, think to yourself that do we have EOMP, other emphasis of matter paragraph in every auditor's report? No. This is only in some of the situations wherein we know that the auditor, the EOMP is a non-mandatory requirement actually in the auditor's report, because only if the auditor feels as per their judgment that the requirement, this requires a disclosure to the financial statements, that some item, for example, item number 1 requires a disclosure in the financial statements, only then we have a EOMP. This is not a must situation. EOMP is not always there in your financial statement. So that is the reason this is correct, because this is a not correct statements for auditor's report. Okay, I hope that you understood, and please read the question carefully and do not forget that this question has a not into it. Let's move forward with the next question now. Okay. Which of the following would be the key consideration by auditors when evaluating the appropriateness of management's assessment on going concern? Because we have an issue of going concern over here, right? Okay. So our assessment will be on what? Our key consideration when we are talking about the going concern will be on what? Very, very straightforward question. You do not have to actually think a lot, okay? The company's current year financial performance, this will look, but we won't be looking in consideration to going concern. So not a correct answer. Company's historical profitability. Why are we concerned about the historical profitability? I hope that you also know about what is going concern. If not, I'll explain you. Going concern is a situation, actually an assumption. It is an assumption that our company will run for a foreseeable, non-foreseable future of time. So basically इसका मतलब ये होता है कि अगर आपने कोई एक business build up कर लिया, so as a person, as a owner of the business, आप ये नहीं चाहोगे, आप ये नहीं बोलोगे, okay, I will run this business for 5 years and then I close it down. आप तो चाहोगे कि ये चलता रहे, सालों साल चलता रहे. You will want that business to work for unforeseeable future of time of future, right? So in this case, going concern basically means that my business will be running on and going on and on and will not stop working. Okay. So if we are talking about, this is actually a futuristic approach. If you see, this is actually a futuristic approach. So why will we be concerned about the historical profitability? When we're talking about the futuristic approach, we won't be concerned about the historical aspects of our financial statement. So the second statement is again not correct. So that gets eliminated. First gets eliminated. Second also, the company's ability to continue in the foreseeable future. As I said, we have to see if our company will be able to work in the near future as well. So that is what our key consideration will be in relation to our going concern issues. Right. So if you know the meaning of going concern, you will be sorted with this question, because this statement actually means this thing. Right. Let's move forward with the next question now. Okay. Given the management's decision to only disclose the lawsuit in the notes to financial statements without making any provision for potential liability. Okay, potential liability. Just a minute. Yeah. What would be the impact on auditor's report? Now, understand one thing. Okay. Um, let's understand one thing. If we see here, they are saying the potential. Okay. Let's read from here. The management, after consulting with legal counsel, has decided to disclose the law in the notes to financial statement, basically a disclosure, okay, as the outcome is possible and not probable. So please understand the difference between possible and probable. And this is in accordance to your IAS 37. If you do not, you just revise the standard and I think you'll be good to go with this thing. But I still want to explain you. Whenever a situation is probable, only when the situation is probable, then we have a provision. But if the situation is only possible, the possibility is there, not a probability, then we will be always having a contingent liability which will be disclosed, right? So contingent liability means a disclosure will be there for contingent liability, which they are correctly doing so, because here they will be having a possibility, not a probability, which is given by their lawyers as well. And they have also confirmed from the client's lawyers as well. So they have a third party confirmation plus their confirmation from their own legal counsel. So this is a good practice that they actually have done. So that means they are correct in whatever they are doing. So, okay. And now let's read the question again. So the question is asking us, given the management's decision to only disclose the lawsuit in the notes to financial statement without making any provision for legal liability, which is correct, what would be the impact on auditor's report? Issue an unqualified opinion with emphasis on matter paragraph. Issue a qualified opinion using the except for wording in the lawsuit. So again, as I mentioned, that they are doing it right. So why will be having a qualified opinion? Of course, no. Issue an adverse opinion due to lawsuit? Of course, a not. Right? And then issue a disclaimer? Again, not, because this will also create a qualified report, a modified basically report, right? So we will be having the first one wherein our report will be unqualified, because whatever they are doing in terms of the disclosure part is correct. That is the reason it will be unqualified opinion with emphasis on matter paragraph, because emphasis on matter paragraph says whatever the company has disclosed right in the financial statements, this paragraph actually discloses them to the TCWG or to the public. So EOMP is the paragraph which actually states something which the management is doing it right, but it just wants to disclose or show it to those charged with governance. Look, hey, this is the situation in the company, and we are rightly disclosing it in the financial statements. I hope I'm clear with this as well. Now let's move forward with the last question, which is again very easy, not too technical. Just revise the basic terminologies and basic concepts, and I think you'll be good to go with section A, because section A just requires a lot of practice. A requires a lot of conceptual understanding. If your concepts are fine, for example, in the last question we did IS 38, in second last question we did IS 10. So you just need to know that what is the right answer. Just need to know the right concept actually. Yeah. Let's read the question first now. After conducting procedures and going concern indicators like the additional debt that Samsingsong is struggling to service, the financial strain due to declining sales and increased competition, the note to lawsuit from a competitor, the engagement partner has concluded that there is a material uncertainty relating to going concern that needs to be disclosed in the financial statement, which is fine, because of course we are having going concern issues. So we will of course be having material uncertainty MURGC paragraph. I hope that you know what is MURGC paragraph. MURGC paragraph in the financial statement have to be disclosed, right? Which of the following statements regarding the impact of this disclosure on auditor's report is correct? Okay. An unmodified opinion, of course we will be having unmodified opinion, because whatever we have disclosed in the financial statement, that is correct. So that will be unmodified audit report will be issued if the management correctly and adequately discloses the material uncertainty related to going concern the financial statement. So they're not referring to any of the MURGC paragraph because that has to be there. So let's see. Okay, let's see. An adverse opinion will be given if in the audit report, if the management correctly gives the disclosure. So if the management is correctly giving the disclosures about the going concern, why will we have a adverse opinion? No, right? So does not make any sense. Now, an unqualified audit opinion will be given if the management correctly and adequately discloses the material relating uncertainty to going concern in the financial statements. Okay, this is correct. And emphasis on matter paragraph section will be added in the order via an EOM. We will be having MURGC paragraph for really, because specifically this paragraph is specifically when the company is going through a going concern issue. So this paragraph will 100% will be there in the auditor's report, right? Let's do the last one also. So this one also is wrong, right? An unqualified opinion will be given if the management correctly and adequately discloses the material uncertainty relating to going concern in the financial statement. So this is correct. And material uncertainty relating to going concern MURG section will be added. So 110% correct. So I know that a lot of students will be confused between, just let's see, will be either confused between this one and this one. But guys, you have to be very careful. Here they are, the first statement is correct, but here they are not having MURGC paragraph. So if you read your chapters, your text very, very well, you will, understand, you will be having a revision that every time we have a material uncertainty, which is relating to going concern specifically, it is 100%, it is actually mandatory for us to have a MURGC section or a paragraph in our auditor's report. So this statement, this whole statement is actually correct, but this is a missing statement. This is not a wrong statement which they have written, but this is incomplete and this is a complete statement. So that is the difference between this statement and this statement. I know that a lot of students will be confused between these two. So I hope now you understood this question. And if you have any doubts, you can let me know in the comments down below. You can also DM us on our Instagram page, which is @beingACCA, and I'll be coming with the third question in the next video.